This is your pre-market update. Yesterday, the Federal Reserve cut rates by 25 basis points from 4.25% to 4.0% and announced that quantitative tightening will officially end on December 1st. However, Jerome Powell said a December cut is not guaranteed, noting divisions among FOMC members. A tone markets read as a hawkish cut rather than a dovish pivot. The market reaction was mixed. The S&P 500 closed flat. The Nasdaq 100 rose 0.41%, supported by toe-ending liquidity hopes, while the Dow fell 0.16%, and the Russell 2000 lost 0.87%. Amid small-cap weakness, bond yields held steady with the 2-year at 3.49% and 10-year at 3.98%. The US dollar strengthened to 99.14, gold slipped to 3,941, and WTI crude edged higher to 60.36. Today's key events include Japan's rate decision at noon, the ECB meeting later tonight, and US EIA natural gas inventories at 11:30 p.m. But the spotlight is on Apple and Amazon earnings after the close. Policy-wise, Treasury Secretary Bassett hinted at a one-year pause in U.S.-China trade restrictions but confirmed new tariff measures under review. President Trump suggested NVIDIA's Blackwell AI chips could be discussed in his meeting with Xi Jinping, sparking optimism in AI and semiconductor stocks. ETF flows showed inflows into tech-leveraged funds like TQC and KELD, while financial ETFs such as XLF saw mild outflows. Technically, the S&P 500's weekly RSI is 70.02, signaling strong momentum but short-term overheating. The monthly RSI at 75.07 confirms the rally's maturity. Valuations are stretched with the TTM per at 31.98, leaving limited upside unless earnings beat expectations. The margin debt ratio at 0.47 highlights rising leverage, a risk factor if volatility spikes. The U.S. equity composite score is 54.19, reflecting a neutral or hold zone. Stable trend. Shrinking upside. Bitcoin's Mavri VZ score is 1.91, RSI 51.43, and fear and greed 34, suggesting softer sentiment. The composite score, 48.39, indicates mild cooling yet neutral momentum. Macroeconomic indicators show inflation pressure remains sticky, not fading. PC trends still imply steady price momentum despite slower growth. Labor data point to cooling demand, but nominal wages stay high while real wages lag. Workers earn more on paper, not in purchasing power. This represents a sticky inflation phase. The economy slows, but inflation persists, keeping the Fed cautious about a full easing cycle. In summary, the Fed's hawkish cut delays a clear pivot, but QT's end provides liquidity support for tech. Markets remain range-bound with elevated leverage and restrained optimism. Short-term direction now depends on Apple and Amazon earnings and the upcoming Trump-Xi meeting. From a tactical view, investors should hold core positions, limit leverage, and wait for confirmation before adding exposure. Always remember, investing involves risks. You are responsible for your own investment decisions. You've been watching Wall Street Brief. See you next time.